I hope you know, I mean, you know something about trading. When you talk about trading,
Yeah, oh, in this industry, you hear a lot of things. Yeah,
what do you personally know about trading?
you hear. So okay, actually, I did small research. I did research about it, and I find out that the trading cut across a lot. We have the forex, we have the crypto, we have the uh, I think the which one, the stocks. Yeah, but I actually did more research about the forex. Yeah, because I learned that that one has the bigger, I don't know how to put it. You know, it is mostly traded. Yeah, they trade mostly. The forex is being is more is it's like it has the much volume more than the other the other, like the crypto and the other ones. So that was what I learned about.
Okay.
Yeah. So yeah.
So basically that is it. So it means you've done your little research about trading.
Yeah, 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 yeah.
When you speak about leverage, you know what a term leverage is about. That also.
Oh, okay. Oh, I don't know. I
You
didn't
don't know
really.
leverage. So that is what I'm
No.
asking. So okay, let's as you are saying, you are much into the forex trading. So let's take the forex trading as an example. So into the forex trading, what do you know about the forex trading?
Okay. So well, what I did was that first of all, you have to just find the definition of forex trading. Yeah.
So that was what
So
you
I
did.
went into the definition of forex trading,
Okay.
which is mostly based on the currencies, buying and selling of currencies. Yeah.
All right. So what you know about forex trading is about the buying and the selling of the currencies. That is it,
Yes,
right?
yes,
Okay. So
yeah.
when you talk about
Yes.
trading,
Okay.
in terms of forex trading, in terms of trading forex, in terms of trading indices, in terms of trading oil, in terms of trading crypto, they are all the
Okay.
same.
Okay.
They are all the same. It's all based on what you said earlier on buying and selling. I mean,
Okay.
buying at this particular point, selling at this particular point. You understand?
Okay.
That is
Yes, sir.
all what trading is all about. But then the question is, how do we trade? Or how do an
Okay.
individual trade?
Okay.
You understand? So before you get how do we trade or how do an individual trade, it comes with some discipline or it comes with some strategy. First, it comes with discipline. Second, it comes with strategy that you have to get
Okay.
to be able to trade. You understand?
Yes,
Because you
yes,
can't
sir.
just go ahead and then just click on buy as you see on the internet that people are buying, people are selling. You can't just
Mm.
go ahead and then click on buy and then invest
Yes,
money
sir.
into it. At the end of the day, who knows? You might lose your money. You understand? So
Yes, sir.
forex trading itself, it's not difficult, but then it's
Okay.
difficult.
Yeah.
When I say it's not difficult, but then it's difficult, what I mean is it's
Mm.
not difficult in the sense that it needs time,
Okay.
it needs patience. We don't learn forex trading within a year. We don't learn forex
Okay.
trading within 2 years.
Okay.
We don't learn it.
Oh,
Apart from forex, we don't learn. I mean, trading within 3 years, 4 years. Trading takes time.
wow.
Even every day is a learning process. Even the
Yes,
profitable
sir.
traders.
Yes, sir.
Yes, even the profitable traders. Every day is a learning process. So I hope. Well, you said you want to go into the forex trading, right?
Yes, please. Yes, please. Yeah. But I learned that when you know much more about the forex, your orders, they are just, how would I say it? When you know forex, you can trade the other ones too.
Yes, in the sense that your strategy that you use in forex, if it works out for you in the forex trading, you can use the same strategy for the other pairs. I mean, for the other, let me use the word pairs as well, or the other, like indices, stocks, any of them. as well, oil as well. You understand? Crypto as well.
Yes, sir.
Yes, so you can use the same strategy for it. So that is why people say that when you're able to trade Forex, you can also trade other, I mean, commodities as well. You understand? But then the disadvantage here is, Forex, in terms of Forex has a very low leverage in terms of Forex to trade. Unlike
Yes,
currencies like the oil, the cryptos, which leverage is very huge. You understand? The leverage of
yes, sir.
trading is very, very huge. That is why it's advisable to start with the Forex, which the Forex will give you that low leverage for you to trade with. You know what I'm saying?
Yes,
Yes.
please.
So trading Forex is very simple, as I said earlier on, but then it's difficult in the sense that it needs time for you to learn. As much as you master your trades, as much as you master your strategy, it becomes so easy for you. I always say that when you trade continuously for 10 times in a profitable market, you become like a god. You feel like a god. I mean, when you trade, yes, it's true. When you trade 10
Wow.
times, I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and all goes in a profit way, you feel like it
Yeah.
because you feel like you've gotten there. Whatever money that
Yes,
you
sir.
put in it, you get it. But then your first key that I have to tell you, Forex trading is about discipline.
Wow.
So when you're late, it's good you came to give me a good explanation that you saw at 4 p.m. When you're late, my first impression was this guy is not disciplined enough.
Yeah, yeah, yeah,
Yes.
yeah, yeah.
So it's good to convince me that okay, fine. So I thought it was 4 hours you text. You understand? So
Yeah, yeah.
I've accepted the apology, and then we move
Well,
from.
thank you very
So
much. Thank you very
what I'm
much.
saying.
Well, I'm much more concerned about this, which is I want to know more about this. So I'll do my possible best not to skip any class that we are going to have, so
Great.
that I can be able to get, because you know if you come, I mean that when I mean I mean I want to know, you could see people living the lifestyle and all that. I'm a social media guy.
Some of the
I'm seeing
lifestyles are fake.
I'm seeing those people, and Charlie, for me personally, I don't really have anything really going on for me like that
Mm-hmm.
could bring an income or something like that. I'm a church boy. All I do is church works and all that. But I don't really have apart from church work, I don't really have any stand or any, let me say, any, because I know it's a skill.
Mm-hmm.
One thing I know that it's a skill, yeah. So
Mm-hmm.
I don't really have anything that could show for it after maybe after being a church boy. I don't have any really thing that could show that, oh, maybe I have any other thing that could really bring me income. So what I'm going to tell you, what I'm going to say is that I'm really serious about this, and for the lateness there, please forgive me. It
Oh,
will
don't
never
worry.
happen again.
All right.
It
So
will never
the
happen
first
again.
question I have to ask, the next question, please, what is your level of education?
Oh, okay. So senior high, please.
All right. So which course did you read in
Visual arts.
visual arts? All right. One thing
Yes,
about
please.
Forex is that Forex does not matter whether if you read business admin in the
Wow.
university. You understand?
Yes,
Forex
sir.
deals with patience. Forex deals with the smartness in you. Forex reveals whoever that you are. Forex brings your temperament out. It makes me see, or it makes you know, you the individual know who you are. That is how Forex is. You understand? I'm not going to
Yes, sir.
make my strategy that I use is very simple. It's not going to make you like look like hey hula la balu like long story. Okay, so you see, it's been a month now that I started advocating for this one-on-one lectures. I had this guy to join my class for the individual lectures. I think let's say we've headed towards a month and a week now, and he
Yeah.
was he was he was struggling with what we call structures.
Okay.
And at the moment that I'm speaking to you, he's very good in the structures now. And in
Wow.
my lectures, I make we start one after the other because I believe there is A before you get to C, before you get to D.
Yes,
And
sir.
I am not I'm not I'm not concentrating on my that I'm making my stars for free. So I want to see the serious people out there. And secondly,
Wow.
because it's for free, I don't expect my students to just go ahead and then trade with real money
Okay.
if you don't
Okay.
know. Even to even go ahead and then trade with them.
Okay.
You understand? What I
Yes,
expect
sir.
my students to do is I expect my students at the end of the day of the lectures, whatever being taught, you get your laptop or you get your mobile phone, you work on them, and then whatever that you don't understand, you send them to me. I give you a feedback. Even whatever that you worked on, you send them to me, and I also give my take on that. If you're correct, I'll give you the congratulations. Yes, but you did well. If you're not, I also would tell you that okay, fine, you did this year, it was supposed to be this year, it was supposed to be that. You understand? All helps we in terms of the learning, in terms of we developing, in terms of we getting or we reaching there. Unlike you get 1, 2, 3 tips or you get 1, 2, 3 knowledge, then just move into demo. Move into demo. Demo gives you some few profits, and then you feel like okay, then let me move into real amount. I mean real account. You move into real account, and the real account starts to show you prepare, and then you withdraw back. Because when I was coming into, I mean forex trading or trading as a whole, I had nobody to teach me forex trading. I had nobody to teach me trading. I had nobody. I just had to figure my things. I mean, figure things out myself. I was just introduced to it by a friend. Oh, I deal with forex trading. Oh, teach me. I don't have time. Or what he said, you can't teach me. That was the thing that he said. The way that he told me. So I have to figure it out myself. But I realized that I was also bound by the money and the way people were living the life. At a point in time, I realized that it was all fake. Yes, the living is fake. But I realized that forex trading is same as an entrepreneur who owns a business and trying to, I mean, manage his businesses or a business very well and getting to the peak or getting to the top there. You understand? That is how I see forex
Yes,
trading. All right, so whilst I'm teaching you, I'll be very happy if you take notes of some things. If you have pen or paper, you can see I have my diary here. I have my pencil here. So most of the times, even me, the teacher, I have my diary and my pencil. So even most of the time when I teach my students, sometimes when I teach you guys, I get it's the chart reflects me to things that I note them down.
yes, sir. Yes.
The chart itself reflects me to things that I note them down. So I have portions in my diary that I have only forex stuff, my serious forex stuff that I note them down. So when the day ends, I go in to check to see and then read over and then get more understanding. So
Yes,
these
sir.
are my 3 strategies that I use. I made mention of the guy that I'm teaching that I made mention of structures. So one,
Yeah.
I deal with what you call structures.
Okay.
Yes. When we get there, you will get to understand a bit of the structures. I deal with what we call structures. I deal with what we call who is that? Let me see. I deal with what we call structures. One, as I said, I deal with what we call price flow.
Thank you, sir. Thank you. Thank
The
you.
network mess do you have? Don't worry, it's well. All right, so I was giving you my strategies that I use.
Yeah. Yeah. Yes.
I focus on only 3 things.
Okay.
One is what is termed as structure or structures.
Okay. Okay.
Two is what is termed as price flow.
Okay.
Three is what is termed as imbalance or gaps.
Okay.
And let me add the last one as four is what we term as equal highs, equal low, or
Okay.
liquidities.
Okay.
So these are the 4 things that I focus on. One, structures. Two, price flow. Three, imbalance. And four is liquidity or
Okay.
equal highs or equal lows. This
Okay.
equal highs or equal lows. These are the 4 things that I focus on in terms of when I trade. So as time goes
Okay.
on, you get to understand uh, everything. All right. So I hope you have an idea about MT4, MT5 trading view,
Yeah. I've heard about it. I've heard about it.
and you have them on your phone or you've not downloaded them yet.
Uh, no, please. I haven't done them yet.
You've not downloaded any of them yet. Okay,
No,
so
please.
the MT4, MT5, and the trading view is a platform that we use in trading. But the most popular one is the MT4, which I think 2 years ago, or a year ago, I think I don't know, it's a year ago or 2 years ago, I think. Yeah, they reviewed the MT5. The MT5 is the
Okay.
same as the MT4, but then just that has a little bit advanced since I started trading, I've been using the MT5. That was what I came to
Okay.
meet when I came. Okay, I think when I came to trading after some few months, I'm in the MT5. If I should put it that way, that was when I saw the MT5. Since I started trading, I have seen the MT5. I've used the MT5 for some time now, so that's what I use. And what I've opened to you that you're seeing on your screen at the moment, or you're seeing on your phone at the moment, is what is called the trading view.
Yes,
Right
please.
there.
Okay.
That is what we call the
Yes.
trading view. So personally, I use the trading view to analyze my chart, and I use the the MT5 to trade. Okay.
Okay.
So we can
Okay.
also you can also trade right here on the on the trading view. But then the broker that I use currently, I don't know, it's been a while that I checked though. But then
Okay.
it has not been linked or has not gone in agreement with a trading view. So when you go to the trading view in search of broker, you won't
Okay.
get the broker that I use. I use XNS as my broker. Yes,
Okay.
XNS is here in
Yes.
Africa. Yes. So I use XNS as my broker. So that is where I deposit my money into. When I talk about broker, you understand broker, right? You know broker.
Yeah. Yes. Yes.
Good.
Yes.
Where you deposit your money, they become the
Yeah.
intermediary in terms of yourself and your yes.
Yeah.
So for you to trade, that is what I use. That's my broker that I use. All right. So I believe so far as you've not downloaded any of the MT4, any of the MT5, probably this thing, even though you've seen it somewhere online, but then you might
Yeah.
not know the useful of, this chart, if I'm
Yeah.
right. Okay, so
Yeah.
today I'm going to take you through the chart, and then tomorrow I'm going to take you through the strategies one after the other.
Okay.
I'm
Okay.
gonna, I'm gonna let you understand where everything lays, everything stands for you to
Okay.
understand. I said earlier on to
Okay.
you that I use the MT4 or the MT5 in my trading, but
Yes, sir.
basically I use the MT5 to trade, and I use the
Yes, sir.
trading view to analyze my charts. Let me see if I can find the MT5. It's been a while open. I use this laptop to trade it. I've been using my phone, analyze the trade on my uh, the laptop, and I use the phone to trade. Not even seeing it. Okay, so I think I have it here. Giving me the MT. I don't want it. Am I still sharing the this one with you?
I'm only seeing the trading view.
The trading view.
Yeah, that's what I'm seeing.
Don't worry, I'm going to share this one with you very soon. So um this can you see this now?
Yes, please. Yes, please. I can
So
see it.
now you see now it has changed now, right?
Yeah.
Okay, so now there is the this MT5 on this
Okay.
red account MT5. Yeah.
Okay.
And there's an XNES one that they have. XNES have the exact. So there's an XNES
Okay.
one for the MT5 on the laptop.
Oh,
This is how it looks like. So it also
wow.
has its own um identifications and stuff, which I will go through later. But then at the moment, the
Yes, sir.
most important one to me is the the trading view, because basically
Okay.
sometimes I want my students to trade as the way I trade.
Okay.
Understand? Yes. I
Yes,
want
sir.
my students to trade as the way I trade, because that is how I think it's most safe and then most, you know, um, let me use the word convenient to trade. Yeah,
Yes, sir.
yeah. I'm trying to look for this thing. Where is it? You see this one that I just showed you has closed itself.
I can see it here though.
No, I'm talking about the empty how do you call it, trading view.
Oh, okay. Okay.
You can't see the trading view from end. It hasn't closed though, but then I wanted to share my screen, but then I still couldn't find it. I've closed it to real. I Okay, so finally we have it. And I hope it should be somewhere here. Wow. Or because I opened this, what do you see?
Yeah, it has come.
Is it a trading view or the same?
Yeah, the trading.
Is it a
Uh,
trading view?
your trading view came and you switched back to the this. I think the MT5 on the laptop.
Okay, then it means I have a problem. So let me close this. Which one is closed?
Well, now I'm seeing your laptop. Oh.
Yeah,
I'm
see,
seeing, I think, your Telegram. I'm seeing Telegram.
and my homepage.
Yes, I don't
So
know
it's
if it's your page.
so now it's my icons. You see the recycle bin, you see the
Yeah.
Instagram, you see
Yes.
the
Yes,
OBS.
please. Exactly.
Oh,
Exactly. Exactly.
okay. So now let me share the screen very well, okay? And I think might go ahead and get this thing. Wow. I'm trying to scroll down to this thing is not giving. Let me do this. Let me close some stuff on my
Okay.
good. It's not here. It was down there. I didn't. So now you can see them now.
Yes, please. I can
Okay,
see
good.
it.
So let's take this thing now. So okay, so here on this side, please follow my mouse. That is where I can
Okay.
direct you. So when you follow the mouse, you see the indicators here.
Yes, please.
These indicators are used to trade. You understand? We use these indicators to
Yes,
trade. Okay, so when you click on the first indicator, it gives you what we call cross, dots, arrow, and eraser. You understand?
okay.
All
Yes,
these
sir.
functions here from 1 to Z are important, but then we have some specific functions in terms of my strategy that I use.
Yes, sir.
Personally, I use the cross here when it comes to, so you see that the
Yes, sir.
mouse pointer is cross.
Yes.
When
Yes,
it's in
please.
terms that when it gets here, it's, you see, when I scroll it up, when I scroll it down, it is giving me the price. When I talk about
Yes,
price,
please. Yes. Yes.
this side here is the
Yeah.
price. Okay, when I talk about
Okay.
price, what I mean is, you see, sometimes here in Ghana, you'll be there, and then they'll say that, okay, now dollars increased. CD, our CDs is now one CD, sorry, 12 CDs, 50 something pesos. It's now
Yes,
11
please.
CDs, 50 something pesos. That is how it
Yes,
moves.
please.
This is the portion that it moves. So
Okay.
this is a price. This is a
Okay.
figure that moves. You understand? This
Okay.
is what is done by
Okay.
those figures. So you see, when I
Okay.
place my arrows, my cross somewhere here, when I move it
Yes.
up,
Yes.
at the left side of where I'm saying that at the left side of where I'm saying that the price moves, you realize that the price will be moving. You see, when I move it up, I've now gotten 65,
Yes,
165,
please.
220. When I move it up again, I've got
Yes.
165, 477. When I bring it down, I've gotten 162, 671. Right. So
Yes.
this is the purpose, or this is one use of the plus. When it click and then gets on the dots too has the same something. And then just that the arrow changes, it turns into dots for you, and then you
Okay.
use it same. But then mostly I prefer the cross because the cross gives me, and then same as the arrow too is the same thing. It gives you like the mouse pointer something for you to use. And then the eraser, it's quite a little bit different because that one is used to erase, as the name comes with eraser. But then it also gives you those, you know, it also identifies the prices for you to as well. So I like the cross. That is what I mostly use for
Okay, sir.
analysis. All right. So when you come here, these are trend lines, these are real lines, info lines, and then all sort of, when you open it, gives you all sort of the lines that we use. Every line here is very essential. It's very important. It's very, I mean, uh, it's. Okay, hold on for me. Let me turn the laptop. So that
Okay. Okay, please.
you would have been giving me switch up very soon.
Mm-hmm.
Yeah, not correct. Okay, so here we go.
Okay.
So here, okay, good. So here I use a trend line. So this is what I use the trend line for. You see, when you come here, whatever line that you prefer, you just click the thread or you click the gray, whatever line that you prefer, you just click on it. So let's click on the trend line. And when you click on the trend line, you see, because I'm using this cross something, it still appears
Yeah.
cross for me. You just left click as we normally do, and then what? Now what? Draw a line, either an horizontal line, or you just right click, move it to the direction or to the distance that you want, then click on it
Yes.
and so it forms a horizontal line for you. Come back, you click
Okay.
it. If you want to do a vertical line, you just do it, it forms it. So whatever that you want to do, you just do it and then it forms it for you with a trend line.
Okay.
Same applies to the other lines too as well. So here in this column, in the line column, I mostly use a trend line and one horizontal ray. This
Yes.
horizontal way, I mostly use horizontal way, especially when I want to identify structures very well. I just click on it, just left click on it to where you want it to come. You see, the moment I left click, you see this line has been formed. Let me take it away,
Yes.
then let me get to a free page. So this is a free page. So you see that when you left click, it's just a new line that has been formed. So I mostly use this one too as well. That is what I use here in the line. But then sometimes I use some of them here because they are all necessary, they are all important. And when you come here, this is called a phenology tool. You know, it's called a fit retracement. And then we also have a trend-based fit extension. It all has its own functions that is. But here, this page, per my strategy, I only use a fit retracement. When I talk about the fit
Okay.
retracement, I'll get there when we get to that portion. But then let me give you a brief explanation. When we talk about the field retracement, we are talking about when price go straight in an impulsive. When I talk about straight, when I talk about impulsive, I mean in a straight way. You understand? When price goes straight, um, sorry, let me use once. Let me see if I can get an example. Let me go to the. Okay. Okay, so you see, uh, you see this side, price went straight this way. Please, are you there?
Yes, please, I'm here.
Yes. Price went straight this way. You understand? When we get to some portion of the lectures, you understand what I'm saying. So here on my strategy tells me that initially this side was a 4H lower high. It was a 4H lower high. Even it was even a 4H lower low itself. At the time I did it, 4H lower low. Because their price came in, so it was a 4H lower low itself. But then I believe price came to swap liquidity according to my strategy. And then I formed a new 4H lower high, and then I
Yes.
went up. So to me, price has broken to my strategy. Price has broken the previous high and has formed a new high here for us. That is a new high that price has formed here for us. So that is when the fit comes in. You see, it's called what? The fit retracement, as you see. So the fit retracement, I just take it from the lower time frame where price started moving up. You understand?
Okay.
Where price caused a
Yes.
broke. When I will get there, you understand. But then I want you to understand the purpose or the useful of the two. And then to what
Yes.
top there. So when you click on it, you left click from the place that price started, and then you left click to the end that price has stopped. So the purpose of the two is price will identify to you a percentage of where you think price will trace into before price will back up. You understand? Because yeah, the moment you use a fit, which means you want to identify, you want to tell us that price will trace at some point in whatever that is doing. Price will be traced at some point in whatever that is. And then what? Price will go back up. You understand? That is what you want to tell. That is the reason why you got a fit. You understand? So this phenology to here, this fit here that you see here, the purpose of the fit is that it identifies the price flow. When I talk about price flow, that is how the way the price is going is termed as the price flow. So it identifies to you the price flow on percentage wise. You understand? So you could see that from year to year, the Fed has calculated the price flow in a 100% mode. So here is the 0%. Here comes to the 0.236%, and then here comes to the 0.38%, and then here comes to the 0.50, that is the 0.50%, and then here comes to the 0.618%, and then here comes to the 0.786%, and here comes to the 100%, that is a downward. So which portion do you expect price to retrace to? Do you expect price to retrace into the, the 0 point, that is a 23.6. That is a 23%. Or you expect price to retrace to the 32%, or you expect price to retrace into the 50%, or the 61%, or the 78%. Where do you expect price to retrace into? That is the purpose of this work, of this fit here. I mostly use this fit, I mostly use this retracement or this phonology tool. Yeah, I mostly use them. Especially when I see price meeting my strategy, I take the fit to identify to see if price has reached, let's say, the 50%, 60%, or the 70%, or heading towards the 100% for me. That is because of these two. So as much as we are into the training or we are into the lectures, you get to understand the meaning of that fit knowledge too. But then here, among all these instruments here, the most instrument that I mostly use is the fit technology retracement. That is the fit retracement that you see here. Yes. So when we retrace back down, I mostly don't use anything on this side because this side gives us a pattern and stuff. But then this guy here or this guys here does not normally give me the thing as much as I need. Probably what I might use be this guy here. Understand? Probably that is what I'll be using. But then even this guy, I don't use him because I'll be using this line here. Understand? So that is for that side. My strategy, I don't use anything. If I would have used anything here, this is a guide I'll use. But then because I don't use anything there, I just leave it. But if for educational purpose, I can use this to educate you for you to identify the A, B, the C, and the D. You understand? So for you for educational purposes, fine. But then if it comes to me in my life, my trading aspect, I don't use anything. So when we come down here, please, are you there?
Yes, please, I'm here.
Good.
Follow.
So when you come down here, we have long position, you have short position, we have the forecast, we have the bar, the bars pattern and the rest. Right. So here in this aspect, I mostly use the long position and the short. When I talk about the long position and the short position, I'll explain to you later. The rest of the forecast, the bar, and then the rest, the post and the long story down there. I don't use any of them. The price range, I don't use. They are all useful. They are all useful. I believe one day they'll be useful to me. But then that's why I told you that every day is a learning per my learning process, per where I've gotten to, and then per my strategy that I use at the moment. I don't use any of this here, and then they are all used. What I use is a long position and a short position. When I talk about the long position, you understand the long position. If I should click on the long position, and I should click on here, and I should extend my long position to somewhere here, you understand what I'm talking about, right? It means that I took a trade here, and down here, from here to here is my stop loss. So it means that, are you there?
Yes, please, I'm here.
Do you want to ask a question?
No, please, let's continue.
Okay, all right. So from here to here is my stop loss. When I talk about you know the meaning of stop loss, right?
I think the name actually explains itself. Stop loss.
Yes. So stop loss means where when you take a trade and the price flow gets to it's when it hits, you don't that portion of your money is being gone. Do you understand?
Okay.
Yes. So you don't imagine you have 100,000 USD in this account, in your account, and then you trade. And according to your trade, let's say you are trading for a sell. Let's say you see this. You let me explain the short and the long. So as I said earlier on here, so the long position here, this is my stop loss, the red or the pink arrow that you see here, and the green one that you see is my profit. So I took a trade somewhere here, expecting my target to be somewhere here. You understand? So the price or price flow, activated and it comes into my way for me and then hits my profit target here for me. The moment it hits my profit target here, automatically price what? Automatically my trade will be executed. I take out my profit. You understand? Price won't continue again. So that is where I expect price, or it is where I expect the market to flow into for me. and the market got there. Automatically it gets there, then fine, I'm done. But then when price retraces back down here, it affects me. I'll explain that one to you later. So same applies to the short. When you click on the short, let's click on the short and then come here, which means you want to tell us that you want what price to retrace down on a low. Imagine you want to sell price. The long means you want to buy, the short means you want to sell. You understand? So what I mean by buying and selling means when it comes to trading, buying means you want to go up. Selling means you want to come down. Are you there?
Yes, please.
So you could realize that on the red candles here are for the sell. Are you there? And the
Yes, please.
green candles here are for the buy. You
Yes,
understand?
please.
So you see that the green candles are rather going up, they are going up. The red candles are rather pushing down, coming down.
Yes,
You understand? So this is what is termed as what buying and selling. I said earlier on that buying means what? Buying means going up, selling means coming down. So on the short position, you mean that price, you want to sell price or you want to sell the market. You understand? And then the long position, you want to buy the market. The Zoom link will disconnect very soon after some few seconds.
okay.
I'll send you a different link on WhatsApp for the second section. I mostly when I have time, I have two sections within a day with my students to complete the two sections. So I'll send you the next section, which is another 30 minutes. And then I think 30 minutes or 45, it's 45 minutes. So it's 45 minutes rather. So we consume the next 45 minutes and then so we take it from there. So you can jot your questions down for me and I'll be preparing to take the next Zoom link, send it to you, where you want the
Yes.
stop loss to be and where you want your profit target to be. I'll explain
Yes,
the
please.
stop loss and the profit target to you in a jiffy.
Yes.
And then
Yes.
same applies to the long short that you are selling. And then this is your profit target, and then this is the stop loss. So let's go back to it. So let's take this as an example that there's a short. So right, let's say we want to sell. So if you want to sell, it means let's put this thing here. Okay, good. All right. So do you see this here?
Yes, I'm seeing it.
Yes. So imagine that is it. So I want to sell. Hmm?
Okay.
I want to sell. I see the market. I want to sell the market, which means I want the market to
Okay.
come down. Is
Yes,
that right?
please.
Great. And I sell from this side. Hmm? So from
Yes,
here
please.
to here, from the red line there, indicate my stop loss. That is where my stop loss ends. Where the how do you call it? Uh the red line ends. You see the
Yes,
rated stop, and then it comes to 27,
yes, please.
0.21%. That is 27
Yes,
amount is
yes, please.
750. You understand?
Yes, please.
So the
Yes,
stop
please.
loss can be I mean rotated. It can be positioned well to
Okay.
where you want it to be. You understand?
Okay.
So imagine I
Okay.
want my stop loss to be somewhere, and I take a trade as sell right from here. That is where I take
Yes,
the
please.
trade from, right from here,
Yes.
for the trade to come down. What did we see? The
Yes,
trade
please.
came down a little for me here, but then didn't
Yes.
fully come down. You could see that the trade came
Yes.
down a little for me, didn't fully come down, and the trade went
Yes.
up. So as the trade
Okay.
went up, as it hits this place, it means
Yes,
that
please.
I have lost my money
Okay. Okay.
based on the lot size that I used. So when I talk about lot size, I'm explaining everything all together. So you have to take note.
Okay. Yeah.
I'm explaining this. I'm explaining the stuffs, the instruments or the indicators here. I'm explaining stuff that are not also here too as well. So when you talk about lot size, first I've explained the stop loss and the profit target.
Yes. Yes. Yes,
These
please.
are when
Yes.
price, hits this stop loss here, and then the moment it hits, whatever money that you lost will be deducted. You understand?
Okay.
Okay.
Yes, yes.
If only you've not gained profit. If only you've not gained profit in terms of, I mean, imagine, let's use this word. You sold somewhere, let's say from here. Imagine it's a sell market that you're selling. Imagine so the
Yeah.
buy market as it is going, but then it's a sell market that you're selling.
Okay.
You sold
Okay.
from that
Okay.
side, you sold from this
Okay.
side here, and then
Okay.
price has sell from that side to this side, and
Okay.
then
Okay.
push push your how do you call it, your stop loss to somewhere here. Price are sold up to this side, and then you push your stop loss to somewhere here. When the stop loss, when price retraces back into the stop loss, you don't lose. In terms of, you don't lose
Okay.
negatives. You understand? You don't lose it
Okay.
because you started selling from the up here, and then
Yes. Yes.
you expect price to come down here, but then
Come down.
price now went, I mean, against you, so you don't
Okay.
lose. What you do is price, you break even. Price give you some
Okay.
profits, and then you lose the rest. You lose the rest of
Okay.
your profit. You understand? Because the price didn't go there with you. All right.
Okay.
So when you talk about lot size is
Okay. Please, I'm coming. Oh, with the break even that you're talking about, which means that you push the stop loss forward.
yes,
Okay.
you push the
Okay.
stop loss forward. You know, when you are
Okay.
trading, when trading goes your way, when trading
Yes.
goes your plan, when trading goes your way, as you
Yeah.
expect trading to go, when it's move
Yes.
according to the plan, eh? At a point in time, you just what? You just push your stop loss forward. In the sense
Okay.
that, in the sense that, please hold on, coming.
Okay.
In the sense that um you do not expect price to come back and then go back into your stop loss for you to lose negatives. You understand? So you realize that that's why I told you that I trade based on structures. So based on my structures, on my lower time frame structures, when price breaks my lower time frame structures, I push my stop loss to heading towards my lower time frame structures where price broke.
Okay.
You understand? So in case the price retrace back into it without my notice, it hits that stop loss. I don't lose, and then price gives me or the market gives me some profits.
Yeah.
You understand? You get what I'm saying?
Yes.
Good.
Yes, please.
So what I meant by the lot size is I was explaining something like, imagine you have 100 USD in an account or in a broker that you want to use to trade. Okay, so the lot size means here that the amount that you use in trading is the lot size.
Okay.
You understand? In basical sense or in a logical sense, it's like betting. It's like soccer betting. It's like
Okay.
betway. It's like sporty bet. Right. So imagine you have 1,000 Ghana cedis in your bet account, like a bet with a sporty bet or any of the bets account, and then you decided to risk. Okay, let me see. Let's say you've calculated for odds like 10 odds,
Okay.
and you decided to risk, let's say, 100 cities out of the 1,000 cities in that bet account that you have to place your bet. When you place that bet and it goes well with a 10 odds, so 10 times what? 100 cities will give you how much? That is 10,000, or is it thousand?
1,000.
1,000, right?
Yes.
Is it 1,000 or 10,000? I'm sure it's,
And 10 times 100, so it's 1,000.
it's 1,000, eh? Okay, good.
Yes.
If it is 1,000 cities, that is a profit is 1,000 cities, right? That is in a betting way. Do you understand what I'm saying? Same applies to forex trading. But then the only difference here is that when you put in that 100 cities, let's bring it to forex. When you put that 100 cities into forex, and then it multiplies for you, the much it is going multiplying. When it's retraced in the opposite direction and you are losing, you are also losing the 900 cities left in your account. Do you understand?
Yes, yes.
Yes. So I've been telling people that, or I've been telling students, I've been telling individuals that I see trading to be a reliance on the lot size. You understand? It is how that is other people call it risk management. It is how the amounts that you risk will determine your profits and also will determine your losses as well. You understand? So imagine you have 100 USD in your account and you decide to risk, let's say 50% of the 100 USD, and let me say 10% even of the 100 USD, and let's say you give a lot size of, let's say, um 0.10, minimum range of 0.10 to 0.5. That is, let's say, the risks that risks give out. You understand? With this, when you're losing huge. You understand? Because you know that the amounts that you have in your account is not enough as much.
Okay.
All right. So as I was saying, the lot size, you have an amount of 100 cities, and then even though it's huge, 100 cities in our currency is very huge, but then it's not that huge. And then you take a lot size of, let's say, 0.10, or let's say um 0.50 or 0.0, which the lot size can take out a lot. Understand? The lot size works along with the leverage. The leverage, this columns here are what you call the leverage. The columns here, they are what you call the leverage. The leverage are the gaps in between the prices. To me, that is what I term as leverage. You understand? So the leverage, some of the leverages are big, some of the leverages are small. Some of the pairs in even Forex have a bigger leverage. Bigger leverage. Some of the currencies that have bigger leverages are in Forex are gold. I mean USD, XAU USD, that is good. GBP USD, that is the pound sterling, and then the how do you call it, the USDs, and then the GBP. I mean the GBP itself has a very large leverage. You understand? Please, you understand what I'm saying?
Yes, please.
Yes. So the lot size means the the amount that you want to put into your account. I mean, you want to trade, you want to risk into your account, as I explained with the betting something. I want to see if I have this something here to show you. Okay. I don't know. So then it means I have to take out this thing from the dark to the light. All right. So let me share with you with my lot size. So currently I'm trading this. If you can see it, can you see very well?
Not really. Yeah, yeah.
Okay,
I'm
then
seeing it.
let me take you to the dark mode. I believe the dark mode you see it. Okay, but then because the dark mode will be very good for the camera. So can you see it now?
Yes, yes. I can see your
Okay, so
charts.
so can you see the what I'm losing now?
Yeah, I'm only seeing some red.
We are not seeing the actual prices. Then probably it's from this. Let me use that phone and see something. What of this side too?
Uh, Please, I'm coming. Yes, I'm seeing it. I'm seeing it. Yes.
Yeah, seeing it. What I
Yes.
mean by the lot size is, you see this portion? Why is my hand not coming? You see this
Yeah.
portion here? You see this portion here?
Yeah. Yeah.
You see, there is this 0 point something, 0 point
Yes.
something.
Yes.
On mine, I use a 0.50 because I'm holding 1,000 USD account.
Okay. Okay.
So there's 1,000 USD account. When you look at the top here,
Yes.
here,
Yes.
down, you
Yes.
see
I can
that
see.
they've written 1,000 USD there. You can see it, right?
Yes.
So that is the amount that I'm having. And here gives you the amount that I'm losing. You see it's in red.
Yes, please.
It
Yes,
gives you the
please.
amount that I'm losing. And then
Yes, please.
here gives you the second one after the 1,000 USD, gives you the deduction, I mean the subtraction of the amount that I've lost. So now what I have in my account now, that is 700 and something USD. That is the second one after the 100, if you got it very
Yes,
well.
please.
And then
Yes,
these
please.
ones are giving me the pairs that I trade. You see the pairs that I trade? The pairs that
Yes,
I
please.
trade, whatever that I'm losing, that is what this guy is giving me here. So one I'm losing 100 and something, the other I'm losing another 100 and something. This is what this guy is giving me here. So this is what we call the leverage at this, I'm sorry, the lot size that I spoke about at the other end. That is 0. The currency that I put inside. So I believe these guys here and me will give you some explanation. As much as we dive into the lesson, you get to understand what I'm saying
Yes,
first, I mean better. So so when you come to the next one, you're still on the arrow. So I said that this side gives you your profit target and your stop loss here. Now I dive into the, how do you call it, the leverage and the
please.
uh
The loss size.
yes, and the leverage and the, come again,
The loss size. Yeah.
the leverage and the lot size. Great. The leverage and the lot size. That was what I dived into. So when we come to this guy or these guys here, we have the brush, we have the highlighter, we have the arrow, we have the arrow maker, marker, sorry. we have the arrow, we have a lot here. I use a lot of stuffs here, a lot. I use a brush, I use a highlighter, I use the arrow. I hardly use the arrow marker, but I use the arrow itself, and I use a rectangle, I use a path, I mostly use a circle. You understand? So there's a lot that I use from here. When I use a brush,
I can even see the arrows.
yes, you can even see the arrows there. So when I use the brush, which means I want to, brush something up. I'm sorry, the brush talks about like indicating something. You understand? See what I'm doing here. So there's a brush. So that's what the brush is trying to tell us. I mostly use the brush in terms of when I want to identify stuff. You understand? So that is because of the brush that I use a brush. And when you come into the highlighter is like form of a marker. So you see how it is. So I will mostly use a highlighter to a lot, and but not always. But the most ones that I use, you see them from what I do on my chart. And the arrows, as you said, you see the arrows here. And then the rectangles. I use the rectangles to identify liquidities and the higher lows and the higher, equal lows and then the equal highs. You understand? So that is what I use the rectangle to also identify. And when it comes to the path, as I did earlier on to you, I use a path to sometimes identify where structures are moving, to identify either structures are moving correctly or impulsive this way, or in a correction manner, in other words, in a corrective way. You understand? So that is what I use the path for. So when it comes to this, I mostly use a lot here. I sometimes use a circle to identify stuffs, to identify, a possession or like an area, the circle. So that's what I mostly use a circle tool for. So I use a lot of stuffs when it comes here. So when you go here to the text tool, the text I use mostly is a text. So you could see that I've used this to indicate the former H, the former high, the former low. You could see. So that's what I use the text for. When I text, when I use this, how do you call it? This thread line here, I add a text to identify if this is a for each higher, for each lower low, for me to get much clearer so that I don't fumble when I'm analyzing my trade or when the trade is, retracing or moving according to my plan. I don't know identify. It gives me that easy identification to identify if there's a for each higher, for each lower. Sometimes I use the comment sections to as well to put some comments there. So basically, these are the only things, the two things that I use here. But then all are very, very important. The notes, they're all very important to be used. The price labeling, they're all very important to use. But that, from my perspective or from my way of coming, that is a that I use. And here, to be honest, I've never used anything here before. I've never used anything here this side before. I don't know what is even there. But when it comes to the ruler, sometimes use a ruler in terms of identifying if price is retracing or identifying sometimes price can retrace to a form and then you can be contemplated as price retrace because looking at how candles form from this side and looking at how candles form from this side, it looks the same. So I sometimes use the ruler to identify if price is what moved to what I want or not. So you see, I took the ruler from the down here to the up here. So taking the ruler from the down here to the up here, what does it show? It tells me that I have 122 into bracket, that is a 95, that is 122, that is 29 bars. When talking about 29 bars, I want to tell you that from here to that side, it gives you 29 candles. You understand? So from the 29 bars, it also tells you that it was formed, this 29 bars was formed within 6 days, 20 hours. You understand? That is 6 days, 20 hours. So that was in up to 27 days. You understand? And then the volume is 2.43 meters. That is a volume. You understand? That is a volume that is telling you. But then what I mostly take much consideration is the bars and the duration. That is 29 bars and the 6 days, 6 days, 20 hours. This are what I take into much consideration. It also applies to say when you're bringing it to sell. The one that I did was into buy. So into sell, you could realize that here it gave me 32 bars, 9 days with 8 hours. You understand? So you see it here, 32 bars, 9 days with 8 hours. So I also mostly want to also identify if price tracing, because if candle is forming the very corrective and then same as the impulsive, how do you identify if price retraced or price was price went up. Even some, it's not even, most of the times you realize that price has to trace based on the candlesticks. You know, when price is retracing it, you trace match candles with match candles, you understand? When price is going in possible, when price is going straight, it goes with few candles, like 3, 4, 5, you know, it goes very nicely. 1, 2, like what you see here. One straight candle here, straight candle there, retrace a little, then gives another candle down. And then like what you also see here, straight candle here, retrace a little, then straight candle up. This telling you that price want this telling you that price is going up. You understand? Unlike you see this corrective moves, corrective when it's telling that price doesn't want to go where it wants to. You understand? Yes, we'll get there. I'll explain all those things to you at the right time
Okay.
when you get there. So when you get here, this one tells you the zoom in and then the zoom out and the stuff. But then down here, it also has a zoom in and a zoom out somewhere down here. Let me push this. Let me clear this thing. So you see that we have the zoom out here, and we have the zoom in, the negative here. You understand? That is a zoom in and a zoom out. Then this thing takes you to the other side, and then takes you to the other side. And then this thing refresh on your page for you itself. Understand?
Okay.
So this thing refresh on the page for you. This I'm giving you the purpose of all here before we dive into the actual lectures, because you have to get to know every purpose so that at the time of lectures you won't find yourself fumbling, or you find yourself in a different way and a different shape. There's a magnet, and the magnet purposely are to hold indicators. Let me put it that way. When you have magnets, it helps you to hold indicators very well. Like it pushes sometimes, but I hardly use a magnet though. I hardly use a magnet. And then that is where you lock. This lock shows that you want to lock your stuffs. I mean your whatever that is here. You understand? You want to lock them. So even when you put them on lock, after some time, when you clean and come, you can still what? Go for them back. And then the same as a lock here, that locks everything. And then when this eye here, you see it has a symbol of an eye. This eye here also tells you that it's when you click on the eye, everything goes. You see everything, all the indicators, everything goes.
Yes, please.
Yes. So, but then when you click on the eye, when you see that it's blue. So when you click back on the eye, and it's gone. You see, everything has returned back. So this is a delete. So delete means I deleting drawings, I deleting indicators, or you want to delete drawings and indicators, you want to remove everything. When you click delete, it deletes everything. So basically, that is what the indicators want the useful of the indicators. When you come here, it gives you the second, the timing, and the day, the month of the trading. So when you click on the 1 minute, when you click on 1 minute, it gives out a 1 minute how candles form, how price formed in the 1 minute structure. So that is what is forming. You understand? That is how price formed the 1 minute. So when you click here, price formed in the 5 minutes. So that is how price is forming in the 5 minutes. You understand? Even price forms in seconds. The price starts forms from seconds to the minute, to the 2 minutes, to the 10 minutes, to the 15 minutes, to the 30 minutes, to an hour. You understand? That is how 15 minutes to form in terms of price. That is how the 15 minutes has formed in terms of price. And then that is how the 1H has formed in terms of price. And then that is how the daily or the 4H has formed in terms of price. And then that is how daily has formed in terms of price. And then that is how the weekly has formed in terms of price. When you see all of them, they all comes with different shapes. If you've seen that, they all comes with different shapes. And then they are all what here is what we call the time frames. This side is what we call the time frames. So basically, based on my strategy, I use only few time frames. I use a higher time frame. I start from the higher time frame to the lower time frame. So I start from the weekly time frame, and then I move. Come again.
I was following. I was following.
Okay.
So I was
So
saying.
I start from the weekly time frame. I move to the daily time frame, move then to the 4H time frame, and then move then to the 1H time frame. I mostly base on my analysis on my 1H time frame. That is why I mostly take my trades from. But then I use the higher time frames to help me in trading. I most of the time sometimes take trades on the 4H time frame too as well. But then my 50 minutes time frame is very essential to me, it's very, very important to me in the sense that when I take trades from the 1H time frame, I try to hold on my trades and then monitor the 15 minutes time frame, return based on structures to see if price flow will then move ahead to break either the low, the higher low, or the lower low for me, or the higher high, or the lower high for me. You understand what I'm saying? When we get there, you understand very well. So I because I trade based on structures, I expect price to break in the lower time frame for me. So that is when I take a buy from this side. When I take, let's say, a buy from this side, I'll be expecting the lower time frame, let's say the 15 minutes time frame. If it is a 15 minutes time frame, higher high, I'll be expecting the 15 minutes time frame higher high to be broken anytime soon. So when a 15 minutes time frame breaks anytime, that is my concentration first. I'll put much concentration on the 15 minutes time frame. When a 15 minutes time frame breaks to the high this way for me, that one I'm okay. You understand? It's not like I'm okay as I'm okay, but then I'm okay in the sense that I believe that price will be going to where I want price to go. But then when the price flow forms in a different way in the 15 minutes, decide not to go that impulsive and then tries to form in a different way to tell me that, oh, Chairman, I don't go your way, I'm not going your way, so please take out your money. Then price tells me that I should take out my money. So I don't trade it anymore. You understand? I've been telling people that if you're in Ghana, I've been telling people that trading is like our transport here. It's like our long journeys here. I don't know whether you've been to Cape Coast before. Have you ever been to Cape Coast before?
No, please.
Okay, so where in Ghana, where in Ghana here have you traveled? I mean, long distance journey,
Yes, Navrongo, Upper East.
Upper East. Where do you stay? Where do you stay?
Well, currently I'm at Ashalibutri, it's
Ashadabutwe.
Mamarina.
Okay, so you're close
Yeah.
to Medina.
Yes, I'm at close to Marina. Yes, please.
Okay, good. All right. So um let's say where should I use where should I was there any account that I experienced recently? Have you ever traveled to the Somenya Road before?
No.
I want somewhere that is very close. What of somewhere the motorway?
Maybe not that I remember.
Not really.
Oh,
So
but you can use
somewhere
going to Accra Circle.
across like those places are these are busy places. So they mostly don't care to. But what I'm trying to mean is, it's like I want to use the Cape Coast for example. You see, when mostly when I'm going to Cape Coast, the popular terminal here in Ghana when you're going to Cape Coast from Accra is Kadeshi.
Okay.
That's a popular terminal here in Ghana when you're going to Cape Coast from Accra. And then the Kadeshi has this station this terminal that you pick or you take your transport from. But in case you don't take your transport from Kadeshi, unless you take your transport from, let's say, Malam Junction, uh, unless you take your transport from, let's say, Kaswa, and then it's mostly sometimes you travel in the evening. That is a norm in going to, I said, you're going to Cape Coast. So when I'm going to Cape Coast in the evening, the driver will pick you all right. But then if you're not careful, when you get to Mankisim, the driver will lie to you. And I will tell you that, Chairman, Charlie, we are sorry, we are not going to go again. So we beg you, Charlie, we didn't get car give you, or Charlie, they here and get car give you. You understand? Yes. So they are not going your way. In a sense that probably sometimes the passengers in the car, that is the most reason. The passengers in the car are not enough. You understand? Let's say you have 3 passengers in the whole sprinter bus, or you have, let's say, 5, 6 passengers in the whole sprinter bus. They are not enough for them. So just allow you guys take that money, pay your money to themselves, and then they'll give it to a car, or they'll what? They'll ask you to find a different transport and then move ahead. That is same as trading. You understand?
Okay.
When trading is moving, is it now? It's moving straight. Okay, so you want to buy. So now it's moving straight. Now it's
Yes.
buying for you. It's buying for you. It's buying for you. So it has bought for you at this side. Now trading came back to this side. So now here someone wants to sell. So at this point, someone else wants to sell. So now it's selling, it's selling. But the way it is going is the way it is going, the way it's moving here is telling you that no, Charlie, I don't will go your way. I don't will come sell give you. I still will go buy. So it be best say you go alight here, just I will go. Else, if you follow me, I go take you go different direction. So if you walk car again and come again to your direction. So here they buy your car. It bab. It is spoil your money give you. It is spend your fuel. You understand? It is
Yes.
wasting your money for you because he has alerted you here. So he didn't mind him. So it's alerting you, he didn't
Yeah.
mind and he has gone back. So yeah, he's wasting your money. That is how I see trading to be as part of our transport system, as part of our transport ways in Ghana. That is how
Okay.
I imagine trading. You understand? That is how I perceive trading to me. So I read the candles, I read the structures, and they tell me that they communicate to me. We speak. I speak to them, they speak to me based on the way they form.
Okay.
You understand? I also speak to them, I also speak to them based on my analysis. And then they also speak
Okay.
based on the way they form. You understand?
Mm.
That is how myself and trading we communicate. You get what I'm saying? So that is how I see trading. So I said earlier on that this side here, oh sorry, I said earlier on that this side here is how is the time frame here. You understand?
Yes.
Time frame gives you the 15 minute, the 1 hour, the 4 hour, the daily, the weekly. Those are the ones that I use. And I said earlier on that when I trade, I mostly wait for my 15 minutes to break out. That is my most important rule about the 15 minutes. You understand? And when you come to this side, here gives you the currency pairs. All here have importance, or all here are very essential. But then this is the most important thing here.
Okay.
They are all very important, but then the most important thing here, this guy gives you the currency pairs, the currency that you wish to trade. So here, the first one is the US dollar index. When I talk about the US dollar index, the US dollar index is an index itself. It's the forex currency itself. It doesn't attach to anybody. It tells you how the dollar itself is flowing. Tells you how the dollar itself is moving, whether the dollar is moving upwards, whether the dollar is moving downwards, whatever the dollar is moving, that is what it tells. It doesn't have any third party attached. It stands alone. That is a US dollar index. So down there we have the US dollar card. I mean the USD card. That one comes with the USD and the CAD. That is a Canadian dollar. You understand? And then this one comes with the USD CHF, and then this one comes with the AU USD. This one comes with the GBP USD. This one comes with the Euro USD. This one comes with the JBP and the USD JPY. And then this one follows with the NZD USD. This one follows with the XAU USD. There is a good. And then this one comes to the GBP bars. This is also stands alone. There is a yen that stands alone. There's a yen currency. It also stands alone like the US dollar index, like the US dollar that also stands alone. It also stands alone, tells you how the yen to is moving, how the yen is passing, where the yen is going for you. You know, the reason why I put these things there is because the reason I place the US dollar index and the yen bags, I mean the how do you call it? The yen, like I mostly short the yen bars. I put a yen bars there is because this currency helped me or um, assist me to know where their pairs are moving. When I talk about where their pairs are moving, we have USD card. You see, it started from USD. We have AUD USD. See, there was USD. We have GBP USD. See, there was USD. We have Euro USD. See, there was USD. We have USD JPY. See, there was USD. We have NZD USD. See, there was USD. We have XAU USD. See, there was USD. When it comes to the yen bars to give you like CAT JPY. You see, there was JPY. You see, CHF JPY. You see, there was JPY. AUD JPY. You see, there was JPY. Euro JPY. You see, there was JPY. JBP JPY. You see, there was JPY. NZD JPY. There was JPY. So this gives you a fair idea about where the market wants to float. Aside of strategy, you understand?
Yes.
Good. And when you click on this plus here gives you the room for more currencies for whatever that you want to trade, whether indices, whether crypto, whether you see it's there, stocks, whatever that you want to trade, it's there, or other currencies that you don't see here. Because base what I have here, I think there are 16 or something like that. I'm sure. When I click here, yes, my watch list is 20. Yes, I have 20 watch list. Yes, that is 20. So there are 20. But then we have more than 20 currencies. But then what my watch list that I have here is 20. So which means I only trade 20 markets.
Okay.
You cannot trade all the markets. You're a profitable trader. Get markets that you think when you trade you are safe, think when you trade you are reliable, you think you've studied the markets for a very long time. So these are my 20 markets that I trade. Even out of the 20 markets that I trade, when you go into my red list for a week, I have only 5 markets that I'm focusing on. On the 5 markets that I'm focusing on, I take out the US dollar index because I'm using the US dollar index to monitor the USD pairs. I take out the yen bars because I'm using the yen bars to also monitor the yen pairs. So I have only 3 markets that I was focusing on, or I'm focusing on currently. on the US dollar index. Sorry, on my markets. Out of the 20, but out of the 20 pairs that I had, I have only 3 that I'm focusing on this week. That does not mean that I'm not putting much attention to the other pairs. You understand? That does not mean I'm not putting much attention to the other pairs. You could see that out of even the 3 that I stated, the 3 here 1, the 3 here 2, and the 3 here 3, you could realize that is this place that I've given a position that this side should be my stop loss, and then from here to here should be my profit my profit target. Where you could see that price has taken the market and then it's moving down. That was what I showed to you, that you realize that there was a negativity. I mean, there was a negative. How do you call it? Price was giving me negative in terms of my lot side that I gave. Price moving to my negative direction. Just this few zero. I took this price somewhere on this red line here. And this red line that you see. So just from here to here is giving that 200 and something USD. You can imagine that was the lot size that I used. You can imagine. So as I was saying, when you click on this red arrow here, let's say we type AUD card. You understand? Which means we are moving different from the currencies that we want. So this is AUD card. You see, AUD card, when the AUD card came, it gives out different types of AUD card. But then I'll mostly advise take the Forex one, the Forex.com. So this is a Forex.com for the AUD card. You understand? Because you're trading Forex. So we take the Forex.com one. So this is the Forex.com for the AUD card. When I click on plus here, it will be added. So you see that the AUD card has now been added. So now this is the AUD card, which means you see I have some arrows on it. This arrows is because I have analyzed it some time ago. Sometimes I used to go there to either learn or to analyze it myself or to either use it, understand. But then currently I'm not using this pairs. I'm only focusing on the USD on the US dollar index. I mean on the USD pairs and on the yen pairs. Those are the markets that I'm focusing on. So here you can move to any one that you want. You can let's say USD. Is it BTC USD or USD BTC? Okay, so BTC USD. You see, that is a Bitcoin. That's a BTC USD. So you can decide to trade a Bitcoin, whatever that you want to trade. You can just come here and then you see them and then you analyze them. What matters most is your strategy. So at this point, I believe I've explained these indicators to you. I believe I've explained this side to you. I've given you other forms of the lot size, the leverage, not plain details to you, but then giving you brief about how it looks like and how it is. As much as time goes on our lectures, you get to understand everything as time goes on. But then currently, if you have any question, you can ask me so that because we have some few minutes to end.
Well, I really don't have any question, so I just have to go and download the
MT4, either MT4, MT5. Get yourself the trading view too as well. Do you have a laptop?
No, please. No, please. I don't have
laptop is not a barrier. As time goes on, when you get to understand the market, you get to understand your strategy, the money will come, which is a proper laptop.
Yes. Hoping so. I'm hoping so for that. So I'll be using my phone. But actually, I'm having a smartphone which is powerful, so it can be a good start.
Great. Good. So you said you don't have any question for now, right?
No, for now, no, please. So for I will just go and play with the trading view. If there's anything I'm finding difficult, I'll let you know.
Okay. All right. So tomorrow we'll be having class at 5 p.m. Yeah. So tomorrow will be 5 p.m. But then I'll prefer we have a how do you call it? Did you say 5 p.m. or 6 p.m. the last time we agreed on?
Last time I was saying I think 6 rather.
Is it 6?
Yeah, I'm sorry. I said for 6.
I have some classes tomorrow, so that is why I've arranged my time.
Yeah.
It's 6 o'clock, yeah.
Please, I'm coming. Yeah, 6.
Okay, then let's make it 5. Let's make it 5:30 there.
Okay.
All right, bro. So have a nice evening, and then I'll see you tomorrow.
Thank you so much.
You're
Thank you
welcome.
so much.
You're
Thank you
welcome.
so much for the knowledge. Thank you. Thank you.